And exactly what R&B is. I'm listening to Rainier Avenue Radio.world.
Friends of Waterfront Seattle presents Pier Sounds, an October concert series at Pier 62 on the downtown Seattle waterfront, featuring sensational regional bands and artists, including Tiffany Wilson on October 16th. These free, family-friendly concerts welcome everyone to come and enjoy live music and the sights and sounds of Seattle's waterfront. Pier 62 was home to one of the most iconic and popular music events in the city, Summer Nights on the Pier. Pier Sounds concert series forges this memory with new energy and music on a revitalized Pier 62 to reignite the sense of celebration and community in the place where it all began. Pier Sounds' new concert series at Pier 62.
Visit puresounds.org for free tickets and more info.
On Rainier Avenue Radio.world, look for the Change Your Food, Change Your Life show. I'm Dennis Weaver, your good food guide and host, helping you to feel good and look good, and who wouldn't want some of that? All that and more from the Change Your Food, Change Your Life show on Rainier Avenue Radio.world. Stories, songs, and guests. Begin living the organic good food life, and the rest of your life just may be the best of your life. Oh, what's up, baby? To your help.
Tune in to Real Estate and Money every Tuesday afternoon from 2:30 to 3 here on Rainier Avenue Radio.world. Join your hosts Violetta Strash with John L. Scott Kent North and Tina Lombard with Guaranteed Rate Affinity. They'll help you navigate the waters of our volatile real estate market and offer you some guidance on how to make your hard-earned money work to make your dreams come true. Learn about current trends, get tips on financial matters, and have fun, interactive discussions about your home inside and out. That's Real Estate and Money.
There is no secret why Downbeat Magazine calls this Seattle's most important annual jazz event. The 33rd annual Earshot Jazz Festival hits Seattle stages October with one-of-a-kind live jazz performances and video live streams all the way through November 7th. This year's Earshot Jazz Festival features established masters like Diane Reed, Tuco Valdez, E. Daniel, and red-hot young stars like Theo Croker, Emmanuel Wilkins, and Samara Joy, celebrating both Seattle's history and its future in the world of jazz. Earshot teams up with community partners like Langston, the Royal Room, and Rainier Avenue Radio to showcase Seattle's own resident artists. Tickets and more information are available online at earshot.org. That's earshot.org. Once again, Seattle's most important annual jazz event. I agree with that. Earshot Jazz Festival, hitting stages early October all the way through November 7th. Call for more information.
Rainier Avenue Radio, your community radio station will provide you with more information. Rainier Avenue Radio.
Can't get enough of that shattered glass ceiling. Hello, everyone. Bettina, Carey here. And we're live on Rainier Avenue Radio, where we help you to shatter glass ceilings with an S. Because, well, after all, glass ceilings are meant to be shattered, not merely broken. If you've been looking for shattering yours, you've come to the right place. You know, we all know that there's one thing in life and that is absolutely certain. What is it? We're all guaranteed to die. Yes. Dying is a critical conversation that shatters glass ceilings. What you say? Well, our next guest is going to turn death into a powerful conversation. If you can believe that. He says life insurance is for the living. My next guest is none other than Troy Thompson. And Troy puts the life in life insurance. He helps individuals and businesses pay less in taxes, eliminate debt in half the usual time, and grow their money in a safe, liquid account protected from loss. He was an active Army nurse for 11 years with deployments to Kosovo and Afghanistan, and he is retired now from the U.S. Public Health Service since 2018. His nursing background helps him educate people on how they can also improve their health as well as their wealth. You say put the life in the life insurance. Troy, welcome. It's so great to have you here today.
It's great to be here, Bettina. I appreciate you having me.
So tell us a little bit more about this saying, you put the life in life insurance. What do you mean by that?
Yeah. Well, so as I had said, most people just think of life insurance as death insurance. That's all that they know. And of course, that is an essential element. That's the starting place. that when I have a plan in place to protect myself and my family from death and disability, then I've taken that out of my mind, I've put it off to the side, and now I can focus on generating income, and I don't have to give that any more attention. And so that's where most people stop with life insurance. It can do so many more things while I'm alive. A quick example, if you like.
Yes, go ahead.
Okay. So for example, a high volume as in numerous times in a lifetime, I will purchase a car. And so most people will most people will borrow. They'll borrow from the dealer, the bank, the credit union, and then other people will pay cash. So let's talk with the cash scenario first. So first of all, how long does it take the average person to save $30,000? Most people, that takes them a few years. So that takes me several years to accumulate enough money to go pay cash for a car. And then when I do that, I take my hard-earned money that I have worked to save and I hand it all over to the dealership. And now my $30,000 is stuck in the car and it's never working for me again. And it's going to go down in value. Most cars are going down in value.
From the minute you drive them off the lot, right?
Well, actually, it's not even that. As soon as I sign the papers, it's gone down in value.
That's right.
And so that's option one. That's the pay cash. So when I pay cash, I have what's called an opportunity cost. So I still have a cost. I have an opportunity cost. That money has lost the opportunity to earn an interest credit for me. So what's the next option? Next option is to borrow the money. Most people only know of the bank, the credit union, or the dealership to borrow money. That's where life insurance comes in. And so what I can do and what I have done twice, well, actually, I've used it to buy a car twice, and I've used this strategy a couple other times, like I bought a nice piano. And so then in essence, I become the bank and I borrow from myself. And the advantage of this is that, let's say $30,000, right? That's the average car. 2 years ago, that was the average car price in Western Washington. And so I borrow $30,000 and I use the money that I have in my life insurance account as collateral for the loan. And so the reason why I do that is because then the money, I'm using other people's money in essence. I'm using my money as collateral. The life insurance company gives me $30,000. I go and pay for the car. I still have my $30,000 in my account earning an interest credit. So here's where the magic happens. So let's say it cost me 4% to do that. So that's $1,200. If doing math on the fly sometimes can be stressful. So let's say that's $1,200 of expense and interest. By leaving my money and borrowing, that $30,000 can earn an interest credit of, let's say, 10%. So then I spent $1,200 on interest. I received a credit of $3,000. So I actually made $1,800 on my borrowed money. Now, some people hear that and it kind of hurts their heads, and I understand because it's a new concept for most people. But that's just one example of my expression.
I will jump in and say it's not $1,200 for your interest because it compounds daily. So it's actually quite a bit more to buy a $30,000 car. So not only have you spent more than $1,200 on your interest, you've also not made money, whereas what you're talking about is making money while you've also borrowed money.
Exactly. And that's how banks work.
Yes.
And, people think, so there's an expression, those who understand interest receive it, those who don't pay it. Well, there's a third group. Those who really understand interest will pay it and receive at a higher rate. And this is exactly how banks make money. Let's be generous and let's say that the banks pay me 1%, which of course they don't. It's a fraction of a percent. But let's say they pay me 1%. Then they turn around and they take my money. So first of all, I have to remember that when I put my money in the bank is borrowing my money. Right? Most people don't think of it that way, but I have to remember they are borrowing my money. And then what they do is they turn around and they loan it at 3 to 23%, depending on what it's being loaned for. And they make money on the difference between the two. Banking is one of the most profitable businesses in the world. So let's go back to my example. Let's say 1%. So let's say the bank pays $10,000 in interest, and they receive a 4% interest from loaning it out. So they paid $10,000, they received $4,000. That's actually a 400% return. So we think, okay, 4%, 1%, that's 3% more. No, it's actually a 400% return. So as a business owner, Bettina, would you spend $10,000 on an employee if that employee made you another $40,000? Right? Of course you would. And so that's one example of how I put the life in life insurance, is showing people, and this can be applied to both the business setting and an individual setting, to use life insurance to basically create my own banking system and make money on my money, and I become the bank.
Wow. And you know, what's really great is I love your story, because we both have a background in the military, me being an Army brat, and if you're of course being in the Army. And I also was a nurse, and you were a nurse. And so tell us a little bit about your background of what got you into investigating life insurance as a means for growing your wealth for your family, and of course making a really good living doing it.
Yeah, so I got some really good advice. So I started active duty as a nurse in the Army, and my first mentor, Major McCloskey, I'll throw his name out there and give credit where credit is due. And so when the major says, Lieutenant, I want you to go to this seminar and listen to what they had to say, you go. And so I went to this financial planning seminar, and the company's market niche is active duty military people. So I listened to the presentation, followed that up with a one-to-one conversation with one of their advisors, and I started a financial plan when I was 22 years old. I'm learning now, having done this professionally for 4 years, that's the exception. And part of that plan was getting a life insurance policy. So I was 22, I'm single, I had no debt because the Army paid for my school, and single, no debt, including no mortgage. And so I didn't have a need, as they say, for life insurance. Nevertheless, it made sense to me that it's going to cost a lot less when I'm 22 than if I wait when I'm 32. And this company believed in permanent life insurance. And that's kind of a type. There are two main types, keeping it simple. Term expires after the term. And then there's permanent. This company believed in permanent. And so multiple times over the years, I was wondering, am I doing the right thing? And now that I'm doing what I'm doing, looking back, I'm very thankful I did that, and I did the right thing. And so that started my interest. So I was working as a nurse for 23 years. That experience, though, started my interest in finance and insurance. And at a minimum, I would meet with my financial advisor, and then eventually my wife, as I got married, we would meet with the financial advisor. And so I learned a lot more about stocks, bonds, mutual funds, IRAs, insurance through those conversations. And it was always very interesting to me. So kind of bringing up to, well, how did I get into what I do today? In 2008, my retirement account got cut in half for the second time. And so fool me once, shame on you. Fool me twice, shame on me. And so after the second time,
situation, right? Just the economy had shifted in 2008.
Yeah, the stock market crash. So I got cut in half in the year 2000 with the .com bursting, but I just kept following a good soldier, put the head down, follow the plan, and then when the stock market went down in 2008 because of the housing crisis, and then things that associated or spilled over into eventually the stock market crashing, then my retirement accounts got cut in half the second time. So then I decided that I needed to take more ownership, be more involved, get more educated. So I started taking courses on stock investing, courses on real estate investing, and all that. It was, again, planting the seeds, developing the knowledge, leading up to getting to the end of my active duty career. And I'm searching for what I should be doing. And that's how I got here today.
That's fantastic. And, not everybody hears this kind of information and goes, yippee. Most people go, oh,
yep.
A little yawn.
That's why I say I put the life in life insurance. Our friend Lee is always talking about how boring insurance is. And I can certainly understand that, because for most people, insurance is just that. It's an expense.
Yes.
And so I am, like I say, and I'm putting the life, the energy into life insurance. It's like, okay, here is how it can be a tax-free cash cow. Here is how it can, have minimal cost and all these things it can do for the individual and the business. I can give a quick example of how it could work in the business setting.
Yes, and what would also be good is for you to mention that it's best to get it early, because that's when you're healthiest. Mm-hmm. And there's a limitation, obviously, as you get older. Life insurance companies are going to determine whether or not you're a good risk or not. And so you advise, of course, to get in while you're young, not wait till the nth hour.
Right. Yeah. So, boy, there's several things to unroll with that. So, first of all, you're absolutely right. It's all based on life expectancy. And so doesn't matter if everything about me today, I'm the same weight, the same health. If everything about me today at 49 is the same as it was when I was 39, it's still going to cost me more today. I'm 10 years older. I'm 10 years closer to my life expectancy. And that's how the rates are calculated. Life insurance companies in the United States have been around in business for more than 100 years. There's not a lot of guessing that goes on with them. And so they know what they're doing. And that's how they've been able to be profitable every year for 100 years, even during the Spanish flu, the Great Depression, the Great Recession. So, COVID-19 of last year, life insurance companies still had profits. They know what they're doing. So people that in their 20s or 30s, of course, think they're going to live forever, but that's really the best time to do something because of what we just described there. There's a much longer life expectancy, and so less money each month is going towards the cost of insurance. Now, back to the business example. So I gave a personal example of buying a piano, buying a car. The same can be done with the business. So the business has a plan, a type of policy set up like I described. And some examples would be they like an automotive shop, and they have $15,000 lifts, or they're a landscaping company and they have a truck, or a $30,000 wood chipper. It's the same concept, right? I'm only limited by my mind on how I use it. And so the same concept, instead of going and borrowing from the credit union and using a line of credit, paying them the interest, business owner uses their money as collateral, pay cash, go and make the purchase, set up a loan payment. Here's another piece of the puzzle that I really love about borrowing from the life insurance company. I, as the owner, decide how I'm going to pay it back. Now, I teach my clients that they should operate as an honest banker, and whatever they would have paid if they borrowed from someone else, that's how they should pay it. So, for example, in my scenario of the $30,000 car, the payment was $520 a month, something like that, if I borrowed from the credit union. Yes. So I set up a payment of $520 a month to the life insurance company. Okay. Now, let's say something like COVID-19 comes along and I'm unemployed and my financial situation changes. Well, I can decrease how much I'm paying per month for my loan, or I can stop paying altogether, and that will not affect my credit score. And so then let's say, 2021 comes around, I'm back employed, I'm doing really well. Then I can pick up and I can, make more payments if I want, or continue at that $500 rate. Point is, I have flexibility. Another point, though, is I have to have the discipline and self-control to use it properly.
Yes. And there's that saying, if you don't have a plan, the state has one for you. So share a little bit about how this affects estates out there.
Yeah. So currently the estate tax is more than $11 million on the federal level. That's changed, 3-4 years ago, it was lower. There are discussions.
Where does $11 million come from? Is that a percentage or a max?
That's the max. So if a person's net worth is more than 11 million, and this is going to depend on keeping it simple, but it's going to keep on whether, depend on whether they're married or single. But keeping it simple, let's say more than 11 million. Mm-hmm. If a person has a net worth of more than $11 million, then they're potentially looking at an estate tax on the excess above 11 million. It used to be lower 3-4 years ago. It was raised up to that 11 million. There are conversations of pushing it back down to the 3 to 5 million range. Government spent a lot of money the last 2 years, and they need more income. And so one way that the government likes to get its income is to tax dead people. And so that's what they do. Now, say, for example, the state of Washington, it's approximately 2 million, a little bit more, but approximately 2 million. So anything in excess of 2 million is subject to an estate tax. It may only be 10%, but nevertheless, if I'm $2 million over and I have a 10% estate tax assessed against me, then I got $200,000 of taxes to pay. So the scenario here is the most common situation where life insurance would help out is where the net worth is in a business or real estate or combination thereof, because then the family lacks liquidity. So they have this estate tax situation, and all of the majority of the net worth is in the business and the real estate. And so there are 3 options. One, liquidate. All right. So if I liquidate, as a beneficiary, if I liquidate the family's, the estate's assets in order to pay the tax, I've killed the golden goose. I've not to be too graphic here, but I've killed the golden goose and I'm pulling out all the eggs right now. And so then it's no longer working for me anymore. So that's option 1. I liquidate. Option 2 is to borrow the money. All right. So let's say it's $1 million and then it's 5% interest. That's $50,000 a year of interest for the loan. Well, $1 million life insurance policy is going to cost less than $50,000 a year. So I'm just throwing out $1 million as an example here. It could be 100,000. It could be 5 million. The point is, life insurance is the most efficient way to cover this situation that I'm describing, because then the asset can be protected. Because if the asset is a business and business assets have to be sold, that can just destroy the business that someone spent 50 years grooming and growing. The life insurance is the most effective way to handle this estate tax scenario.
Fantastic. So that's a really great example. So leaning into how folks can get a hold of you, and who would be the kind of person that would be interested in talking with you?
Okay. I would say the person who is an outside the box thinker. They're willing to consider something different than the conventional approach. And what I do, so there are 3 pieces to a financial program: insurance, savings, and investments. Most people go right to the investment. The first place to start was insurance. Like I said, that the worst case scenario is taken care of. And so what I do can stand alone, or it can be complementary to the conventional approach of an IRA, 401k, money in the stock market, right? So they can be a standalone, or it can be synergistic. Way to get a hold of me, probably the best way would be to go to sfglifesolutions.com. And that's SFG as in Symmetry Financial Group. So sfglifesolutions.com.
Fantastic. And I want to make sure that we have a little bit of a testimonial from somebody that you've worked with. We have a few minutes left. Can you share an example of someone who would have benefited from what you were doing?
Okay. One thing that I have not mentioned yet as in terms of the life insurance for the living is also being able to access that death benefit while I'm alive in the event of something like cancer, heart attack, or stroke. So I had a client, every year I call my clients at least once a year to see if there's been any change. I called him up and he says, "Oh, I have prostate cancer." And I said, "Okay, do you remember we had this conversation about how you can access that money if you want to in the event of cancer, heart attack, stroke?" And he had not remembered because, when I get a diagnosis of cancer, there's a lot in my mind, there's a lot going on. So that's a value of me checking with people. So that's an example where I was able to help someone use their life insurance while they were alive and take that money and pull it while they're alive. So now they have money to pay for their cancer treatment. They can use it however they want. So, to pay for cancer treatment, pay the mortgage, buy groceries, whatever. Life insurance is for the living.
I love that. I love that. So we've talked a little bit about yourself, and we've talked about testimonial here. What makes you different than other folks selling life insurance? I mean, I've been approached in the past. I'm going to be approached again in my future. What sets you apart?
Mm-hmm. Well, pretty much the things that I went through the first 10 to 20 minutes there, talking about putting the life in life insurance, right? There are many different companies, many different ways. Everything's a commodity today, so I can go online and get different quotes for some death insurance, as we'll call it. So I have a one-to-one conversation, evaluate a person's need. There's a way to put a true number to it. I show individuals how to use it while they're alive. And then also with Symmetry Financial Group, that's who I work with, I am a broker. And so that allows me to cover many different situations from 2 weeks old up to 85 years old. And so then I can get my clients a good value. So I'm not limited by one company and their products. I have multiple companies, multiple products, so that I can get what is best for them in that situation.
That's fantastic. And so we have about 30 seconds. What are your final thoughts here? Oh, and by the way, I wanted to have you tell me a little bit about being the angel of freedom.
All right. Well, that's probably more than a 30-second conversation, but I'll squeeze it in there. Angel of Freedom, a nickname suggested to me by a friend, Nigel Henry, and so I have embraced it. And when I have my financial house in order through both a combination of insurance in case of the worst case scenario, and I have a solid plan that I have a great deal of certainty that I know will work, then this weight is lifted upon me and I have the freedom to expand my mind, to focus on my relationships with my family and friends, to focus on my business, my work, and generate the money to come in to continue to build my freedom. And so that's how I am the angel of freedom. Both, angels are associated with death. So in the worst case scenario, the things I do take care of that. And in the event of life, I help people have financially free lives.
That's fantastic. Thank you so much for coming on our show today, Troy. It's been great to have you. We really appreciate this powerful discussion on death and life. Our next show coming up is God is Inspiration. And you want to see our show next week? It's Thursdays, always same time, same station, Rainier Avenue Radio at 1:30 p.m. Love, like, and comment and share with others. We really appreciate all you watching out there and listening. See you all next week, and bye for now.
Ask most anyone if they feel empowered in all areas of their life. If they're honest, they'll likely say no. Hi, I'm Bettina, Carey, and I may be only 4'9½", but what I do is big. Dream big, break through, and connect to powerful people like you. And what I'm doing is inspiring and empowering others to break through, shatter their revenue glass ceiling. And I'm here to tell you that the We Empower You community is where you're going to want to be. It's a community. It's a membership. It's a movement. And what we're doing is helping you to start and run your online business without doing a thing. We're helping you to find angel investors that you don't have to pay back, to run your own membership program where you don't have to do the work, and so much more. We are here to empower you at the We Empower You Global Summit and the WeEmpowerYourLife.com. Visit us on the web at WeEmpowerYourLife.com or text the word Bettina to 555-888. We'll see you at the summit.